priority. And I met Dan a while back at a Panhandle Producer Royalty Owners Association. Really frustrated with my current software, and he was standing there all alone at this booth, and I said, "Do you know how to do this software?" He goes, "I absolutely do." So that's how we met. It was just a serendipity.
Twist of fate.
It was. And so he handles all of our accounting for our stuff, and he's going to talk about writing, and he has a slide to tell you about his background, and so I don't even have to go over that. No. I'll let him do that. So thanks, Dan, for being here.
Thank y'all. I do have some materials out here, which is just copies of the slides. If you can't really see, I don't know if somebody wants one, and then on the back there's a little page to make notes. Pass all those around. And did you want to turn more of the lights off, or do you think this would be fine? All right, we'll get those passed out, then we'll settle in and get started. Can you hear fine, Mike? Yeah. Mike's coming through good? Sound good? Okay. So as everybody gets settled here and Kim gets back, and Ryan gets back, we'll start. All right, everybody got some materials? Everybody ready? Okay, I was asked to speak, kind of touch basis. You're doing your craft. Sometimes you make money at it. Sometimes you don't make a lot of money, but sometimes you make a lot. Sometimes you don't make very little. So you figure, is it a hobby or is it a legitimate business? And the IRS treats it differently. And we could go over every little subject on this matter, but this will be a 2-day tax seminar, which I don't think you'll have time. So this is just a general overview of IRS rules and resources available from the IRS to help you all determine whether it is a hobby or a business. Yes, sir. I have a mic that he's talking to, but I don't think this one works. I'll try to speak a little louder, or maybe you want him to move up a little closer. My name is Dan Brown. I was born and raised here in Amarillo, moved off a few times for the Air Force, but we always came back here to Amarillo. When I was younger, I was a correctional officer out there at Texas Department of Criminal Justice. That's where I met my current wife. She was on shift, so I met my wife in prison. I didn't like working there. You're with the dreg society day after day. It wears on you. I was not that kind of person, so I started doing a little bit of accounting, and I worked for Brown & Fortunato law firm as just a basic general ledger accounting, doing billing and stuff. I got a job at Abuelo's Mexican restaurant as a manager, assistant manager, and kitchen manager. It was a little bit better pay. It was more exciting, fast paced, but you work weekends, holidays, just wasn't conducive to family life. So I came back to accounting. Mr. James Rex Limert, I had a little accounting firm. He was gracious enough to take me in and help finish my schooling. And I've been there for 11 years. And then a couple years ago, some of the senior employees had bought in as the partnership, and now it's called Limert, Holder, and Ohm. I have a 14 years total experience, but I have 11 years in public accounting with Limert, Holder, and Ohm. I got my degree at Amarillo College. I went later in life as an adult, so I got my applied science associate in accounting in 2001. I was awarded a couple of leadership scholarships that was just for returning adults. I did get my bachelor's degree from West Texas WT A&M in 2012. I was awarded Outstanding Academic Achievement in Accounting for fall 2011. And I am currently an applicant to the Texas State Board of Accountancy to be a CPA. Now to kind of get some of the legal speak out of the way, this is not specific tax advice. Everyone has a different mix of taxable transactions. So please consult with your tax professional to address your specific tax situation and reporting needs as it applies specifically to you. Unless I know your total tax picture, I can't really give you advice on what you should or should not do. This is just a general overview of some of the rules so you can decide whether your activity is a hobby or a business. And then we will go over some of those rules and resources and hit on some of the big main points that Linda and Natalie had asked me to address. So y'all writers fall in the artist quandary. With sculptors, painters, wherever else, you have a passion for creating something. You do it to express yourself. You do it for self-satisfaction. You do it for recreation, whatever. But sometimes you can get paid for it. And if you get paid for it, the IRS certainly wants their cut. Now, to make that money, you had expenses. But, what do? The IRS has different rules for reporting hobbies and for businesses. So now you got to figure out which is which because they're both totally different and have different tax treatments. The key feature of a business is that you do it for a profit. You usually engage in a hobby just for sport or recreation. You can still make a little money, but you're not doing it for a profit and you're not doing it to live on. The IRS has 9 factors to determine whether your activity is a hobby, and make sure you base your determination on all the facts and circumstances of your specific tax situation. There's a publication, IRS Publication 535. It is available online. It's just a little brochure, pamphlet, and it will help you say, is it a business or a hobby? And these 9 factors come directly from that publication. Do you carry on the activity in a business-like manner? Does the time and effort you put in the activity indicate you intend to make it profitable? Do you depend on the income for your livelihood? Do you live off this, or is it just a part-time gig, just to, for your satisfaction? Are your losses and expenses due to circumstances beyond your control, or do you control them? Do you change your method of operation in an attempt to improve a profitability? Are you always, looking to streamline and squeeze every dime out? Do you or your advisors have the knowledge to carry on the activity of successful business? Do you have a business mind? Are you doing everything you should do to carry it on as a business? Were you successful in making a profit in similar activities in the past? Does the activity make a profit in some years, or all years, or no years? And do you expect to make a future profit from the appreciation of the assets used in the activity? As a common theme you heard there, profit, profitability. So to the IRS, the whole thing hinges on presumption of profit. And these are direct quotes out of the IRS Publication 535. If you get audited, the IRS will look at if you claimed it's a business, and the IRS looks, they'll go back 5 years. And if you did not make a profit in at least 3 of those 5, they say, nope, it was a hobby. Yes?
How much of a profit?
That is one of those gray areas where I guess it could be a penny to $1 million. It doesn't actually say, and that's where some of this stuff is gray, and you have to interpret it how best you can, or get with your tax professional, show them all your documents, how you did things, and you just have to make a determination. A penny profits, penny. If the taxpayer dies before the end of the 5-year period, the test period ends on the day of the taxpayer death. That's kind of a kick in the teeth after you died. And it's kind of creepy they put that specifically in there, but that is one of the rules. If your business or investment activity passes this 3-year of profit test, they will presume it is carried on for business. So 1 year you make profit, next year, 2 years you don't, but then the next 2 years you do. That's 3 out of 5. Man, you got a business. If not, they'll say it's a hobby. If you've been doing your tax returns for those 5 years as a business and it should have been a hobby, you're going to have to redo all that and probably pay a lot of taxes. So you, after considering everything and you talk to your tax professional, you say, I think it's a hobby. So what do you do now? Well, hobby income, of course, they're going to want you to report it, but it goes on line 21 on Form 1040, which is just your main personal tax return. It's a little box called Other Income, and it becomes part of your gross, your adjusted gross income with everything, with wages, dividends, interest, capital gains on stocks. It all goes into that one big figure, AGI. Hobby income is not subject to the self-employment tax because if it's a hobby, you're not self-employed. You're just doing it on the side. You can also get your amounts to make your return through Form 1099s. I'm sure a lot of y'all probably get 1099s for writing things, and you have to report those because the issue reports those to the IRS. So you got people tattletelling on you that you got paid, and you better report it too because they match those up. And always, whether it's a hobby income or business income, keep good records. They can be computerized or they can be handwritten, but just keep good, thorough records. Now, these are the deductions, the expenses. So within certain limits, you can usually deduct ordinary and necessary, and those are key factors because ordinary is one that is common and accepted for that activity, and necessary is one that is appropriate for that activity. You know, fixing a granite countertop on your house is not, ordinary or accepted in the business for writing. Yes. Well, like ordinary and necessary, like, you're going to need a computer. That's an ordinary expense for that field of work, and it's necessary. You're going to need paper or a copier. All those are ordinary items for that type of business and are definitely necessary to perform that business. Well, it is vague, and once if you get into a lot of tax work, a lot of it is vague. You got totally right and totally wrong, and here's the whole gray area to kind of play around in. Is if you interpret it, your tax professional interprets it after you've read some of the things, and that's why you need to address some of this with your tax professional. So if you have a weird item you're not sure if you can deduct it, then you can look it up, research it. If they don't specifically deny it, then we put it in, and then just, you get audited, they didn't like it later, they'll tell you.
So if we buy something for that, we can't use it.
Right, you can't go buy an Xbox and claim it on your writer's business.
Well, I mean, if you buy a computer and you use it for your writing, can you also play games on that?
Oh yeah, I just wouldn't tell anybody.
Yeah. Oh, okay.
Hide all those files.
You don't have to log your hours or anything like that? Like how many hours per personal, how many hours per
It depends on if you're sharing a resource like that. It's just a quick overview. But yeah, generally you would need to prorate some of that. Like if you're going to claim a telephone, and you're, some people use 50/50, some use 25/75, depending on how much you use that for business, unless you're J.K. Rowling, then, everything's 100% business jet, phone, everything. But there are limits on hobby expenses. You can only deduct hobby expenses up to the amount of hobby income. If you earned $1,000 and it took you $2,000 in expenses, you just get to claim $1,000. There are no losses in hobbies. And that's part of the catch. You don't get subject to self-employment income, but then you don't get to carry a net operating loss that goes against other income. Hobby expenses are reported on Schedule A, line 23, other expenses. Schedule A is where you itemize deductions. It is subject to a 2% floor. If your husband if your spouse makes good money and y'all have, some other things in your adjusted gross income is $100,000 for that year, the 2% floor is $5,000. Or no, that's $2,000. I'm sorry. It's $2,000. So you have to have $2,000 worth of expenses before you can even deduct a dime. So a lot of people don't even get to take it because of that 2% floor. And you must itemize deductions. So if you don't have enough, on Schedule A goes house taxes, house insurance, medical. If your house is paid for, you don't have enough taxes, don't have enough hobby expenses, so you just have to take the standard deduction, then you just lose all the expenses. You have to be able to itemize to get use of those. So a lot of people, they fall in that category. So you're claiming all the income, but you don't get to claim any of the deductions. And that's one of the pitfalls of hobby. If you don't have enough to item, like I said, if you don't have enough to itemize and you take the standard deduction instead, you lose them. They do not carry forward. They're gone. It's over for the year. They're history. So after all considerations, you look at the 9 factors, you look at the profit motive, you think, well, maybe I'm running a business, not a hobby. It's a business. Well, there's a IRS, it's called Publication 583. It's called Starting a Business and Keeping Records. And this is a very useful tool if you're just getting into it. You don't know much about business or how to start one up or haven't talked to anyone about it. Some of the key factors it goes upon are getting a taxpayer identification number. You can use your Social Security as a TIN number and just be a sole proprietor, or you can make a formal limited liability company, an LLC, and that shields you from a little bit of legal liability. If you get sued over your writing, they can't come after your personal assets. They can just have whatever's in that LLC, which is usually a computer, a printer, whatever you have for your business, and that's all they can go after. Yes?
Will you be going over
No, because, I can just kind of talk about now. Usually an LLC is when you start getting, quite a bit, maybe some royalties running in. You're making your total living off of it now. You've got several assets, several, I guess, copyrights or whatever, trademarks or whatever y'all have for your writing. And now you've got something that you need to protect. Especially if you're making quite a bit of money, you don't want them coming after and getting your house, your cars, your kids' college fund or whatever because you broke a contract or something happened in that. So as just starting out, you'll probably be a sole proprietor because there's a cost to make an LLC. You have to file with the state of Texas annually. And there's filing fees and other stuff with it, but it's a good way to shield yourself once it does get big,
about how much are the fees? Processing.
To make an LLC, a lawyer to put one together is going to cost you about $1,200, and then it's like $150 a year to register it with the state of Texas every year. And then there is a little Texas franchise report that goes along with that. If you do become a LLC, Texas is going to want their cut of it for you operating a business in Texas, but the threshold is $1 million. So if you don't make $1 million, you don't have to worry about it. So that's probably about everybody in here. Or you can just do
Something to aim for.
but it's something to aim for, yes. I wouldn't mind paying Texas franchise tax. That means I'm a millionaire.
Yeah.
Yes, ma'am. Well, no, until you're making good money, you're living off that money, totally living off that money. You've got, quite a bit of, other assets tied up, your copyrights, trademarks, whatever, that you need to protect. Or if the money it's generating, you want to buy a big house, bunch of cars, you fund your college kids fund, you want to protect some of those assets. If you're not an LLC, you're just doing it as a sole proprietor, they can sue you and go after anything you have. If you have an LLC and they do something with the writing and sue you for contract or breach of contract or whatever, they can only go after the assets owned by the LLC and not you personally. You could do that, and then also it depends on how risk tolerant you are. If you're a brand new writer, how much legal trouble can you get into, and you don't even have your first project yet? It's just if you're not very risk tolerant, then you want to do that right off the bat before you even start. It's personal finances, so it's personal choice. That's why you need to talk to your tax planner and decide, do I need to do this now? Do I have a lot at risk? Am I going to have a lot at risk? Do I need to wait until later, till it gets a little bigger? You know, some people do it right off the bat, and it's, you know, if you got the money to spend, it probably wouldn't hurt. Yes. The Texas what? I would hope they can go after, you know, other assets or force you to sell some of them. Now, if you got, now they will let you file bankruptcy. They can't touch the house and they can't touch one car per person, but you would have to file bankruptcy after they file their judgment. You would have to file bankruptcy to get that protection. Well, that's true, and that goes back to this personal finance. What do you personally feel safe with? You know, this is 10% mathematics and 90% personal.
This is something that makes sense if you gain some notoriety where people
Yeah.
target you for a lawsuit. Well, none of us here are negligent because we're the best kind of people.
Yeah, then you may want to make an LLC right off the bat then, but it's not necessary.
Is that your professional advice? Is just
No, when I just tell people that, because a lot of people then they go ahead and file suit, and the only people that make money off that are lawyers fighting back and forth and usually make nothing. Okay. Moving ahead, it'll also help you choose an accounting method. There's cash basis and accrual basis. Most of y'all will fall under cash basis. When an expense is incurred when you pay for it, and income comes in when it hits the bank. It also talks about the kinds of business taxes if you're not familiar with them. Income tax, employment taxes, the dreaded self-employment tax, and how do you deposit these taxes. It talks about information returns that are due. Most of y'all are familiar with the 1099 miscellaneous. That's an information return. You report 1099s to the government through a form called 1096, which is also an information return. W-2, W-3, those are employment documents, and the 941 and 940 are payroll tax reports, and those are all information reports that will be due. It talks about penalties. There's several deadlines, quarterly and annually, for those information returns and for remitting taxes. And there's different penalties for the different ones you miss. Some go by time, and if you don't have it by time, there's a penalty. Some, if you did not file it, there's failure to file, and that's also a different penalty. Publication 583, starting your business and keeping records, will also help you work your way through depreciation, the business use of your home, or what everybody calls the home office, and record keeping. Business income. You report income and expenses on Schedule C, which it goes in the packet with your personal Form 1040. The income and expenses are netted together to give you a profit and loss, and they go to figure in overall adjusted gross income. So if you make a profit, your AGI goes up. If you have a loss, it will go against other income and your AGI will actually shrink. And that's the good part about business. You can have a loss. The income, however, is subject to self-employment tax. And what's bad about self-employment tax, if you didn't make a whole lot during the year and after you take the standard deduction and your exemption for you and your 2 kids, your taxable income is 0. The self-employment tax gets added on after all that. So you could have 0 taxable income, but still owe quite a bit in self-employment tax. There's no way to get around it. Business expenses, ordinary and necessary. There we go with the ordinary and necessary again. They have to be to the nature of your business. These categories come straight off of the Schedule C, and they are to probably encapsulate all that y'all would ever use, and if not, there is one that's called Other. You just list it by whatever you call it, but there's advertising, car and truck expenses, commission and fees, contract labor, depreciation, employee benefit programs if you have employees, insurance, interest, legal and professional, office expense, rent, repairs and maintenance. Then they have supplies, taxes and licenses, travel, meals, utilities, wages, which is payroll wages you would pay your employee, and then in other. Some people break out a lot of other things. Some people like to break out telephone or contingent education or stuff like that. Research expense. Now, if you don't claim it in that year, you can't really capitalize stuff like that and wrap it up. Yeah, so you need to claim it then. Or if it's a big thing and you're waiting to put out a big project, then you could capitalize them and put them on your balance sheet and then pull them back out whenever you do, bill them for it, and then you do get paid. Yeah. Graduate work? Like hiring graduates to do, or what do you mean graduate work? Oh, no, general education is not covered. Now, if you were taking some kind of continuing writing class, then you could, but just to get your degree, there's other places on the tax forms to put education, but it'd have to be like a writing seminar or a writing class. Yeah, advertising is actually a class already. But yeah, there's several. That's why I have that other, because you could, name things differently. There's all kinds of things that could come up that you'd want to add on there, and so that's why I have that other. Yes, and that would be maybe under taxes and license or fees or research fees or something. Yes. Yes, that's actually coming up here shortly. Contract labor and employees. So yes, we're gonna go over that real soon. Okay, but first we're going to talk about depreciation. Most people have heard it. We're not quite sure what it is, maybe. But you depreciate business property that you lose longer than 1 year. A desk, computer, filing cabinet, like paper, cartridges, ink, that's going to get used up before the year's over. But it's only usually all, large items. You're not going to depreciate a $10 trash can, even though it's going to last longer than a year, but it's for major purposes. Business property that you must treat, office furniture, you do it for 5 years. If you are big in publishing and you bought your own building, instead of renting your space, it's 29.5 years. Machinery and equipment, your computers, printers, whatever, or big equipment is 10 to 15 years. Even though they don't last that long, that's how long you do it. But there is a section in the clause that's actually called Section 170, that's the actual section number, and it allows you to expense certain capitalize them all in the year acquired. There's several rules and circumstances for that kind of treatment, so you'd have to get with your tax professional. But usually, if you have you buy some desks and computers, you can Section 179, which is instantly depreciating them, which is the same thing as expensing them. But you can do it up to $500,000 or up to income. Yes. No. Yeah. Yes. These would all be new purchases once you've started, in the next year or whatever. But okay, now we'll talk about if you need some help, you're going to hire some help, maybe run errands, proof stuff, help you out around the shop or whatever. Do you pay them wages and take taxes out? Do you just pay them a flat fee like contract labor? Where do you find the rules on that at? Well, the Department of Labor has a thing called a fact sheet number 13, Am I an Employee? It is from the Employment Relationship under the Fair Labor Standards Act. It has several little circumstances that ask questions like, do you directly supervise them? Do they perform the work at your place of work? Are they free to do it on their own schedule? There's several factors that the questions that ask that'll tell you is it contract labor or an employee. Then the state of Texas weighs in, and they have a form C8, which is employment status, a comparative approach. It's the same thing, Can they, do it at their own discretion? Do they have to use your equipment? Do they, come when they want to? Do they do this for other people, or just you? So once you've looked at both of those resources and think, you decide, well, I think my situation is contract labor. So like any other vendor, whoever you hired, they would just send you an invoice and you would pay it. You don't have to withhold any taxes on contract labor. You will report that amount you pay to them on a Form 1099 and file that with the government. And then you follow up with the 1096, which summarizes all your 1099s for other services provided, which summarizes all those. But after everything's considered, you're thinking, well, maybe I do have an employee. I tell them what to do. They come over to my place to do it. I tell them when to be here. They use my equipment. So what do I do now? Well, IRS has another publication. They have tons of resources online. Covers everything. Lots of good reading for night. But there's one out there, IRS Publication 15. In the accounting world, it's called Circular E, because that's what it used to be called back in the day. And it covers wages and payroll taxes. It'll tell you everything you need to know. They update these on a yearly basis. So if of course, we're always a year behind. Even though we're in 2016, everything's a 2015 model for IRS. It talks about Social Security and Medicare, the FICA taxes, and FIT, federal income tax withholding. It also in there will have tables and rates to help you figure withholding. They claim 3 people, they're claiming married, they get paid biweekly, they get this amount, you go to the table, here's how much we need to withhold. FICA is the Social Security and Medicare, and it is an employee expense, and the employer matches. So whatever you withhold from the employee for Social Security and Medicare, you're going to have to give that to the government and then turn right around and give them the exact same amount. One is an expense to the employee and comes out of their pocket. The other half is an employer expense and comes out of your pocket. And then you have to remit these to the IRS, and there's only one way to do it now. It's through the EFTPS system, the Electronic Federal Transfer Payment System, that's what it is. And it's online. You used to be able to call or go to a big bank with a voucher. Now you have to get a number and go online and do it. It sucks it out of a bank account instantly. And then on a quarterly basis, there's an information return you have to file. It's the 941. It summarizes that quarter, which is 3 months. You know, first quarter covers January, February, March. So you would summarize all that payroll you paid, the taxes you collected, and if you remitted or not, if there's a balance due, and you send in your money then, or it's already been paid and the balance is zero. Then at the end of the year, you have one called 940, and it is for the federal unemployment tax, or we call it FUTA. It's an information return. You do not withhold federal unemployment tax from employees. It is purely an employer expense. And you do that once a year. It is 0.029% on the first 9,000 earned. So if your employer earns more than 9,000, once they hit 9,000, you just stop paying. And then there's state payroll taxes. We live in Texas, so Texas has an unemployment tax called SUTA. It also has an information return. It's called Form C3. You file it quarterly. So when you file your 941, turn right around and file your taxes. It has a certain percentage based on years without an unemployment claim. I think it starts out at pretty high at 5 or 6%, and every year you don't have an unemployment claim, it gets smaller and smaller and smaller, and it goes down. So when you first start up, it's pretty high. And they take that on the first 7,000 earned. After your employee makes 7,000, you don't even have to worry about it anymore. Just like the FUTA, the SUTA tax, you do not withhold it from employees. It is purely an employer expense. So you can see now you're matching Social Security, Medicare, paying all of the federal unemployment and all of the state unemployment, just to say I have an employee. So it gets a little expensive, and there's lots of forms to fill out. Okay, and if that wasn't a big enough headache, we'll talk about the self-employment tax. This is not a payroll tax on you. It's similar to it, but it is the tax on earnings from your business. If you make a $10,000 net profit from your business, the government looks at it, you just got a $10,000 paycheck with no taxes taken out. We want our taxes. We want the employer side and we want the employee side. So it is similar to Social Security and Medicare taxes from health from employees. It's got those two components, the employer and the employee. You figure it on a Schedule SE, which is self-employment, and it goes for part of your Form 1040. It's based on any income from Schedule C. The only good thing about it is if you were an employer, your employee portion you pay your employees, you get to deduct as business taxes. This also lets you deduct the employer equivalent portion of your self-employment tax in figuring your adjusted gross income. So you get a little bit of a break there. The tax consists of two parts. It's 12.4% for Social Security, which is both halves at 6.2%. But it has a ceiling on earnings that are subject to the tax. In 2015, anything over $118,500, you didn't pay any more Social Security tax. But Medicare has no cutoff. You make $1 million, you're going to pay $1 million worth of Medicare tax on that. You do get, or this is just a repeat, you do get to deduct the employer portion of your self-employment tax and figure your adjusted gross income. It only affects adjusted gross income. It does not affect, you do not get to knock it off your earnings, and it does not knock anything off of your self-employment tax that you owe. It just helps shrink down adjusted gross income so your tax liability isn't as great just on income. You have, like I said, you have to pay both the employee and employer portion. Now these are just FICA taxes. There's nothing withheld for federal income tax. So you got to, let's like say you made 10 grand, you got a 10 grand check with no taxes taken out. That's a pretty big hit at the end if you didn't save any money. And especially if you make 50, 60, 100 grand at this thing, it can be expensive. So please save part of your earnings over the course of the year. We say 25% just to be safe. So if You do a gig for somebody, you get paid 10 grand, you need to put 2,500 up somewhere where you don't touch it and save that for taxes, because it is coming. And then, like I said, you can have zero in taxable income after your deductions and your exemptions, but you will still owe the self-employment tax on that money. The very first year, you don't have any. Now, after that, it depends on how much you owe. There's all these complicated formulas the government use, and usually the IRS will tell you need to start making quarterly payments. But if you know it's coming, it never hurts to go ahead and do them yourself. You can voluntarily do them. You can just come up with a flat rate, or usually when the IRS does it, it takes last year's income tax liability plus 10%, and that's your new one. Whether by that time the new year rolls around, you have a bad year, you paid way too much in there, you're going to get a big refund. But when they ask for it, you have to pay them, or you can voluntarily do it. On high earners, if you have big tax liability, they will start sending you the vouchers to pay quarterly. It just depends on your cash flow. Can you afford to give them a little bit of money every quarter, just let it sit there interest free and hope you don't get a refund? So it's also about personal finance. And yes, if the IRS sends you vouchers, they're going to expect that. And there is penalties for not paying those on time. You wait 2 or 3 months, pass the deadline, and finally kick in the money, there's a little penalty for that. They call it underestimated tax payments. And you're like, how did I get penalized for paying early? But that's your IRS, folks. Yes. Yes.
So I had a lady. That's all
It is a business expense, but it's kind of contrary. So they're doing a service for you. Unless you're buying supplies or gas, but if somebody comes out and repairs something, if they're not incorporated and they did more than $600, they need to get a 1099 from you. But you get to deduct it as repair and maintenance expense. The 1099 is to report any transaction over $600 to a service provider who is not incorporated. And there's other special rules. That's why you need to get these publications and read through them thoroughly. But generally, your lawyers, your accountants, repairmen, computer repair guys, they're going to probably need a 1099 if they did more than $600. Yeah, if it's it depends on what kind of LLC. There's different kinds. Is it a partnership or is it a single member? Normally, what we deal here is a single member. And yes, the single member will need one. And that's a good subject because you need to bring that up with your tax professional and look at all your expenses and see, do I need to file any 1090? Because if you don't, they charge you a penalty and then $50 per form. So if you were supposed to send out 50 forms and you did not, that's $2,500 penalty. It doesn't hurt to send one to someone who doesn't require it, but you can pay money if you don't send it to someone that does. So if you don't know if you're supposed to send one or not and you're on the fence, send them one. If they don't need it, they'll throw it in the trash. And you don't get any trouble for it. Okay, now we'll move on to a subject that was brought up, home office. I'm sure everybody, works out of their house at some point. Spare bedroom, kitchen table, whatever. The IRS has some rules. Some of them are pretty cut and dry. Some are not. If you're renting a space, this has nothing to do with it, but if you're working out of your home, you have to use this exclusively and regularly. And those are the key words. You can't use a spare bedroom that the kids play in and your mom comes over twice a week and spends the night in and call that your home office. Or if you do, don't tell nobody. But it has to be exclusively for all your writing. That's where you keep all your files. That's where you work. That's where your desk is. That's where you take your phone calls. If you have clients or meetings, that's where you hold them. Some have a separate entrance, a separate door for it. Or if you have a separate structure, like a little ridered artist bungalow out back, you can count that too, as long as you're using it exclusively and regularly for that. And for any storage. So usually your storage, though, is the closet in the spare bedroom you're using for your office. There's two kinds of office expenses: direct and indirect. A direct would be something you did just for the office. I needed to run a fax line. I had some repairs done. I had the thing painted, or I had to, run some new electrical conduit, or I had to run a cable or internet or whatever. Those are direct home office expenses. Office supplies, everything else would go up on, office supplies or something else that has nothing to do with home office. The indirect is expenses for keeping up your home. Taxes, mortgage interest, insurance, utilities, general repairs, if you have a security system. What they do is they prorate that based on a percentage of the square footage of your office versus your house. 200 square foot office and a 2,000 square foot house, that's 10%. So you could take 10% of your taxes, mortgage interest, insurance, utilities, security system cost, whatever, and claim that for your business as a home office expense. Now, the other 90% of those expenses go other places, so you don't get to double dip and take full amount over here and 10% here. It's 90 here and 10 here, but a lot of times it does help you. And there also is like the easy office. They ask a bunch of general questions. It figures a small percentage. It gives it to you without any backup, no fuss, no muss, but usually it's a very small deduction. And if you really do truly have a home office, it's better to do it the long official way like this. Now we'll move on to record keeping. Okay. Yes, if you make a bunch of improvements to your office that you deduct or depreciate, there is recapture when you sell the house. So that's a very good point. So we don't recommend people depreciate an office just for that fact. But most repairs you can just expense, they're gone, you don't have to recuperate them. But if you do have something that you did depreciate, a big capital asset, then if you had a big major remodel and you had to capitalize it over 15 years or whatever, then you would have to recapture all that when you sell your house, and that would be a big tax bill. But all the furniture and stuff inside that's already expensed out, you don't have to worry about it. Or if you build you an office and you depreciate it, and then you sell the whole property, then yeah, you're going to have some gain on that. Did I answer that fully, or do you? Nothing on this is easy to understand. That's why people have such hard time with taxes. And there's so much material. I know we're going so fast through it, but hopefully when you leave here, you've heard enough catchphrases and things that when you're talking to your tax professional, like, oh yeah, I remember that. I'm supposed to do this with it. And oh yeah, I'm supposed to look at this to see if it is a hobby. And here's all my records. And yeah, I remember I got to pay taxes, and I hate it, but I know it. And, so now we'll get back to record keeping. I don't think there's very many slides. Yeah, there's not very many slides left. I think we can push through. So why keep good records? Why keep any records? Well, you need to monitor the progress of your business. You got to prepare financial statements. Sometimes we're trying to get a bank loan or something. They're going to want to see some kind of financials. Identify the source of receipts. Keep track of deductible expenses. Just kind of keeping track how am I doing good? Do I need to change something? Why am I losing money? Or, man, I'm doing fantastic. I can't believe how good this is. And the main point is to help prepare tax returns. If the better records you keep, the easier it is to make a good, clean tax return. You're probably not going to miss many deductions. And then, of course, now you have support items for your tax return. So it also helps your preparer say, okay, well, I don't have to ask questions or get him to sign an affidavit. It's all listed here in his records. And one of the biggest things is business records to defend you in an audit. 3 years go by, you throw everything away. IRS wants to audit that year. They want to see bank statements, your general ledger. They want to see everything, but you already threw everything away or didn't keep good records. they'll just figure the tax return for you and send you a bill, which will not be in your favor. So please keep good records. We suggest use a separate bank account. Just one for your writing. If you're in an LLC, get a business checking account for that LLC. If you're a sole proprietor, just get a special writing account. All expenses and all income go through that bank account. You don't mix it with personal, and you don't use it for personal. You can use journals. You can use them old-timey 15-column pads if you want. It can be computerized or it can be handwritten. The government doesn't care as long as they are complete and consistent. A lot of people use QuickBooks, Quicken, an Excel spreadsheet, whatever, just as long as you're keeping track of incoming income and expenses going out. There is a very good Excel template made just for writers, and it's at www.artisttaxinfo.com. It is put on by a CPA firm called Riley & Associates, and it's just a general form with lots of categories, and it just can help you to keep track of your income and expenses. Keep all invoices, receipts, and bank statements for at least 7 years. Supposedly after 7 years, if they haven't contacted you, you're good and free. You've made it. They won't come back after you. So to recap, like I said, I know we went fast. We hit a bunch of different subjects here and there. It's a little overwhelming probably, but hopefully you got a small understanding of what all's involved and what you need to do to get this thing going. So if it's a hobby, there's no real profit motive. You're doing it for fun, but you make a little money out of it. There are no losses. You can only deduct expenses up to the amount of income. Income goes on 1040, expenses go on Schedule A itemized deductions. If you don't have enough to itemize, you lose all the deductions. And then they do not carry forward, they're just gone. But on the upper hand, you're not subject to self-employment tax on it. A business has a clear profit motive. It can have a loss that reduces other taxable income. Income and expenses are both reported on Schedule C. It is subject to self-employment tax, which is 15.3 if you take both of those taxes put together on profits. You can still owe taxes even though your taxable income is zero. That's one of the pitfalls of business. You can still owe taxes, but on the good side, if you do have a loss, it goes against other income.
I have a question.
Okay.
At what point do you have to start reporting?
From day one, $1. Technical, black and white, legal, that's what you're supposed to do. A lot of people if I didn't get a 1099, I'm not reporting it. And or a lot of people say, I just want you to pay me $500 and keep me under the cap, and then you pay me $500 and you pay. So now I'm doing all these gigs under the radar. But yeah, you need to.
So my little business made
Technically, legally, you should. If you came to me, I'd say that's not even probably worth it. But if you're making hundreds of dollars, it probably wouldn't hurt, to start claiming it. Especially if people give you a 1099, you have to claim it. Or you're gonna get a letter from the IRS said they sent a 1099 in, you did not match one up, we refigured your tax return, here you go. And you're like, oh wait, well I got some business hobby losses I can put against this, And so.
What happens if you were supposed
You need to claim that income.
to? Oh,
Yeah, right.
But it's enough that you claim it to just
Yeah.
say, okay.
Because if you claim more income than what the government got in 1099s, they're not going to care as long as you're truthful about it.
Okay.
Now, there's lots of different ways to file. Everybody's got a brother-in-law who's been doing this thing. He's been filing like this for years, never got caught. That may be true, but I have
That
to.
sounds solid advice.
Some people get away with it forever. Some people get caught this first year they do it. What I'm here to do is to teach you the legal, thorough way to do it, and then y'all take this information and y'all get to go decide how y'all want to do it. Yes. That is a big gray area. Are you? What I would look at if somebody came to me, I would say, "Are you still working?" I say, "Well, yeah, I still work at the parts store, but I write part time at night and weekends, and I've made a little money." I would probably say that's a hobby. But if you're saying I make tens of thousands at this, it's my full time job. I live off this money. I spend all day during the week writing, then that's probably a business. Uh, you would have to look at your whole entire tax picture, and so I can't. That's now that's what we're calling specific tax advice, and I cannot give that to you.
Would they make you? I made $1 million in my hobby last year.
Yeah, I don't think there is
My hobby's scratch ticket.
a cap on that, but if you did have that and you tried to put all those expenses on there,
Right, that's the deal.
you're not going to get credit for those expenses. So then you're going to want to do it as a business. You would try to do it as in your favor, but after the 3 years and you haven't made a profit, now you're getting in a little trouble. You can do it the first year because a lot of businesses that are legitimate businesses don't make money for the first 2 years. But they're going to go back and look at all those profit motives. Did you work somewhere else? Did you spend your whole time doing it? Do you live off this money? And you'd have to take your total tax picture. Are you getting Social Security? Do you get royalties from another book? Does your wife got a bunch of oil and gas royalties y'all are taking in? Do you have rent houses? It all goes in your bag of, taxable items that you really need specific tax advice on.
If you have a DBA.
Well, according to some of the IRS publications, if you don't make profit in 3 years out of 5, it's a hobby. It might even be an expensive hobby, yes. Yeah, if you're not making any money at it, that's but most time you are going to want to treat this as a business. Y'all all seem pretty dedicated. It's not like you're probably doing this on the weekends just to express yourselves. But you need to remember, though, after 3 years of no profit, the IRS may be looking at you. You may have to change your ways. And if you're putting a ton of money into something that doesn't make money in a business, then you're in the wrong business. And then it is a hobby. Yes. But if you're working constantly, getting something every week, every month, then it's probably going to be a business. If you write 2 articles a year and get 1099, that's probably going to be a hobby. Yes. Yes, businesses have bad years, and especially new businesses don't show profit for the first couple of years. You just got to be careful that, in that 3rd year of no profit, are they going to come back and audit me? Do I need to change what I'm doing? And that was part of the those factors. Am I changing my business model so I can make a profit? And then it's like I said, it's a big gray area. This is yes, this is no. There's a lot in between that you need to take into account and decide with your personal tax advisor, is it a hobby or is it a business? People that want to play it safe will do it a different way. Yeah. Well, no. I mean, you got. My dad makes furniture as a hobby. He doesn't sell any, but he works hard out there. But it's a true hobby. But it's just one of those gray areas that you're just going to have to sit down, go over all those factors, and make a wholehearted decision. I'm going this way with it. I'm sure most of y'all would want it as a business. But you can't say, I'm going to write some articles, so I'm going to go out and buy me a brand new office. I'm going to get a $5,000 computer, $4,000 copy machine, bunch of office furniture, hire me an assistant at $30,000 a year, and have this huge loss for the first 3 years. If it's like an hour or two a day or an hour or two a month just to help you move something or do something, then that's probably going to be contract labor, even though they're doing it on your time and under your your instruction. But if they're coming over 4 or 5 times a week, every week, that would be an employee. For what? $50 a quarter for what? Okay. I don't know about the $50 rule, but if you had somebody come up and hook up all your computers and try to charge you $800, that's still contract labor. Or if you came over and said, I need you to help me paint this space or whatever, and some guy came over and painted the space for $500, he's still contract labor. No, an accountant and lawyers, they charge $10,000, $12,000, and it's still contract labor. If I can answer that.
All right. I do selling through Amazon. So that Amazon, I own state sales tax on Amazon. I pay state sales tax. If someone orders something, if I receive.
So Amazon doesn't charge sales tax? You have to charge the sales tax and the price of your product, or?
Do I need to? Am I responsible for the sales tax? Say I get $100 in royalties.
I don't think they call it like a sale. Like if you were selling office supplies, you had a warehouse here, but you're selling them online, and somebody from Ohio bought something, then they would have to pay.
Amazon collects it, right?
I think Amazon. I'm not. Actually, I can't answer that question because I'm not sure how Amazon does it.
No one on the internet seems to know either. You look this up.
And
You pay tax when you buy it from Amazon. Right. So they're responsible for it.
Yeah, and see, that's what I'm thinking. I know that if I set up, a booth and I sell books.
But I can tell you, if you have books at your house and you sell to out-of-state people, then they would if you're going to mail it to them, then they would have to pay sales tax in their state. You would charge them their rate because you're delivering it to them, but you're not doing it in person. You're having a carrier do it, and they're not coming to Texas to buy it. Yeah, you can either charge a specific sales tax or just include it in the price. And if you're selling them for $10, $12, then you back that out and say the price of the book was really only $8 or something.
Right,
the rest was taxed.
Like if I go to Wisconsin
Technically, you should, but it falls under. Ironically, it's called like the pro sports quandary. They can't keep track of all. If you're in a band and you go play all over the place, you're supposed to pay sales income tax on the money you earn in all these towns in those states. But who can keep track and who knows you're there? But pro athletes do because they know when they're going to be there. It's all highly publicized and on TV. So pro athletes have to file like 20 state returns from every state they played in.
I'm sure they do it all themselves too.
Oh yeah, just like the one basketball uses H&R Block for all that.
So I guess it's one of those questions where.
Yeah, you're going to be flying under the radar, so no, you probably won't have to pay any kind of tax there. But if you're in a bookstore doing a signing, of course, they'll charge sales tax right there. But if you're selling them out of the trunk of your car or whatever, then.
Well, in Oklahoma, the state sales tax guy.
Yeah, if you're at an official sanctioned fair, then yeah, they probably want to see your sales tax exemption or sales tax certificate to even have a booth. Right.
But what I'm saying is a state official comes to the book fair before you leave. How many books? That's a fair before you leave the state.
So okay, so you know exactly. Do you need a state Oklahoma sales tax license, or do they have one for the fair?
Yeah, they have one.
That
for
makes
the
sense.
fair.
They probably get just a temporary one or
So
whatever.
before you leave the fair, the state guy goes and gets your.
How do you know that's really the state guy?
I just found a new racket.
New business. All right, this is the last slide. We can finish this up real quick, and then we'll take some more questions. There's lots of resources out there. IRS.gov is a very good one. It can tell you everything you want to know. That's where all these publications are. They're in PDF form. You can print them out. You can save them as PDF. They read like a book. Publication 15, Circular E, that's for employee taxes, if you want to read up on that. Publication 529 is miscellaneous deductions. That was for your hobbies. Publication 535 is business expenses for your business. And 583 is how to start a business and keep records. Riley and Associates puts out a website called Arts Tax Info. Has lots of resources just for writers. There's also a website called writersdigest.com, and it has lots of forums and advice just for writers. Any more questions? Okay, let's.
Sorry.
It's all right.
This will be this. Well, I wrote it down. This is my last one, though. I promise. Say I have. It is. I promise. Shut up. Say you're selling. Say you're taking pre-orders. I've seen some information online that isn't an earned income until the product is shipped.
Right, it is deferred income. But if you're running a simple business and you're on the cash basis, you don't care. When the money hits your bank, that's when it's called income. If not, you would call it income, have to defer it up to a payable that would get paid one of these days, and when they came in, then you would get paid. But you would probably be just cash basis, and whenever the money hit the bank, that's when you claim it as income, and you cash a check. Any other questions? Okay, Natalie?
Indie authors, that's a whole new thing. One of the questions I have is so would that be if I give them
Yeah, because if they do not split it out at the publisher between you and them, they just give you the. Are you talking about they just give you the money and you're responsible for paying the guy?
I'm the writer, I'm the
Okay.
publisher.
If they pay you, but you owe somebody from a contract y'all made, then you would have to claim. Let's say it's 10 grand. You would have to claim all that 10 grand. You would claim all that 10 grand, but then you're going to turn right around and deduct an expense, probably commission, and pay the illustrator. You can call it marketing, you can call it commission, you can call it, contract obligation, whatever you want to do with them. But if they made it out to you for the full amount, then you have to claim the full amount. But then you turn right around and claim a deduction to get it down to just your part. And if it's over so much, then yeah, you would probably need to send them a 1099 for their help.
Pay them for the work, and you don't.
Better contract.
He's definitely going to think twice next time.
It can happen.
Not feel guilty about that.
No, that's not something you should feel.
I would hire them for the sequel, and then.
And pay them for the work.
But I paid them $250
Yeah.
It's just a changing.
Yeah. Well, I know we went over a lot. We went over it fast. Yes. Yeah, because I don't know of anyone that really teaches Quicken unless you could just happen to know somebody. Most people would do QuickBooks. I even think AC has a little continuing education thing on QuickBooks. The only thing I can think of is a search online for maybe a Quicken seminar, or if, I think Microsoft or Intuit actually puts Quicken out, and they may have something or a little webinar or a booklet or something. Probably not around here. You know, that's going to be hard to have someone show you Quicken and teach you Quicken. Or just fiddle around with it and until you do get out of what you're needing. Because at our firm we use QuickBooks. No one knows how to use Quicken, and then we have another expensive tax software that does a lot of bookkeeping too. So not very many people use Quicken. Yes. Like what kind of materials are you talking about? Well, in writing, I'm sure your materials would just be, just paper, pencils, notepads, whatever, and those are still just considered just supplies, And if you're using it from the unit, all goes under their supplies or office expense, or a lot of stuff. It doesn't have to be clear cut and categorized, or you could use that other and just put materials, whichever you're calling materials, on the other line as materials and put the expense there. No, it doesn't. If it's a legitimate expense, even though it's in the wrong category, but it is deductible, then a lot of time it doesn't even matter. A lot of people just put everything under office expense.
What you buy to make something out. Is what you use to make.
Well, if you're on the cash basis where you expense it as you buy something, you just expense all that whether you used it all up or not. Now, if you're trying to do like a manufacturing thing and making a craft, then there's a cost of goods sold and you have inventory, but that's accrual basis, which most of y'all probably will not fall under. I would just put it, I would just put everything under supplies. Probably, if it's on 59, probably not. But under an audit, they're going to want a receipt. There's no receipt. It didn't happen. So I would use your debit card on your special business account. If you just go to the ATM and take $200 out and say this was for supplies, they're probably going to disallow that. You need to use that card at Home Depot instead of paying cash. But if it's a couple of bucks, it doesn't make one difference. Well, I wouldn't go there.
I see it all the time. That maybe charge 50 cents to my
Or you write a check out of your business account if they'll take checks. But you really want a receipt for everything if you're going to claim it as a deduction. And the more you get used to keeping receipts, the easier it becomes and the better your records are. But you're right, it's a pain for a 79-cent pen, but. I would like to think so, because I did learn a lot during my, research of putting this together about hobbies and stuff. So, so thank y'all. So, I hope when y'all leave here that you have just a general knowledge of some subjects that you need to discuss with your tax preparer, and when things come around tax time, you're not totally shocked and don't know what's going on. So, I hope I got through to you, and thank y'all for having me.
Thank you so much for
You're
being
welcome.
here.